Hi, a lot of people want to start investing in Japan, but they're not really sure what to do or how to do it. And in this short video, I'm going to run you through the main options that you have. So first of all, assuming you're going to invest in the stock market, it's a good idea to have an emergency fund set up first, so you've got some cash savings so that if something happens, you don't have to sell your investments at the wrong time. Also, if you're going to invest in the stock market, it's a good idea to only do so if you're investing for the long term. So if you need the money next year, maybe to buy a house or to pay for school or something, don't invest that money. Put it in the bank where it's going to be safe and you're not going to deal with short-term volatility where stock prices go up or down in the short term and maybe at the wrong time for you. So make sure that you have some savings and you don't need the money that you're going to invest. Once you've done that, where to invest? So generally speaking, the best place to invest in Japan is through an online broker. There are the big ones are kind of Rakuten, SBI and Monex. And the reason I recommend these is because their fees tend to be lower. They have a wider range of products. And possibly most importantly, they're not going to call you up and try and sell you stuff. They basically just leave you alone, and that makes them the best choice for most people in Japan. Now, when you're investing, you're mainly going to be investing in these three types of accounts. You might have heard of some of them: Ideko, and Nissa, and a normal taxable account. So let's talk about Ideko first. So Ideko is actually a contraction of the English name of this account, which is an individual defined contribution account. And Ideko is basically a self-managed retirement account. So it's basically a way for you to save and invest for retirement. To make it more attractive, the government gives you a tax break on your income if you pay into Ideko. But the flip side of that is that you can't access your investments until you're 60. So I guess if the purpose is to save for retirement, that's actually a good thing. You can't take it out and spend it on whatever. So Ideko is basically, if you're thinking about retiring in Japan, this is a great option to put some money away, reduce your taxes, and get ready for retirement. Nissa. So Nissa is the Nippon ISA. And the ISA is based on the UK ISA. And this is basically an investment account where the government says, okay, up to a certain amount you can put into here every year, and any profits you make will not be taxed. And this is basically to encourage people in Japan to invest because, as you know, Japanese culture is a little bit negative on investing, and that's probably a hangover from the bubble years. So this is basically the government saying, we'd like you to invest, and to make it more attractive, we'll basically not tax you on this certain amount per year. There's two types of Nissa. There's the Tsumitate Nissa, which is a smaller amount of money, but it's tax-free for longer. And then there's a regular Nissa, which is a larger amount of money, but it's tax-free for a shorter amount of time. Now with Nissa, you can access your investments at any time. So it's a bit more flexible than Ideko. And then finally, assuming that you've used up your Ideko allocation, you've used up your Nissa allocation, and you still want to invest, then you'd put it in a taxable account. Now, Japan has this really nice account called the Tokute Koza. And basically, with this account, your broker will do all your taxes. So if you sell something, you incur a tax on the capital gain. The broker will calculate your taxes, take it out of your account, pay it to the government, and you don't have to do anything. There is no tax paperwork or reporting at all with a Tokute Koza account. So most people should use a Tokute Koza account if they're investing in a taxable account. Japanese tax on dividends and capital gains is 20.315%. It's a flat tax. So regardless of how high your income is, how much you pay in income taxes, this is treated separately. And basically for most people, if they're planning to retire in Japan, you should do Ideko first because it gives you the most tax savings, and then Nissa, and then finally, if you want to invest more, you put it into your taxable account. If you're not planning to retire in Japan, but you are planning to live here for 5-10 years, then do Nissa first and then a taxable account, and maybe consider setting up a broker account in another country so that when you move you'll be able to keep that account, because when you leave Japan, Japanese brokers will ask you to close your accounts. And that is the end of this short guide to investing in Japan. If you need more information, please come to retirejapan.com. We've got a lot of information on there. We've got a very active blog and a very active forum where you can ask questions and get impartial advice and information, not from me, but from members of the community there.